So yeah, the reflections from my hot seat additional training. This was yeah, so this is kind of part of our see one, do one, teach one. So I've seen Dave do it for a very long time. Dave helped me do it once, and now I'm trying to teach it. The big takeaways from my week were that I need to secure my trades. I need to have patience during the expansions, and I need to manage the break even line. So securing my trades, something that we talked about was me leaving a lot of potential profit on the table because I got so nervous whenever I would move into profit just past my break even line, I would take the profits. And so something that I'm working on now is using the secure trades instead of the X. There was a couple exceptions for this, which was recycling and flipping your positions. So if you were counter trend trading and the market was going down, you were buying, you got to a good spot where you could get out, you wouldn't want to necessarily secure there. You just take it off and go ahead and get into sells to go with the trend. And the same goes for recycling. If it comes up, on the first time and you're pretty confident that it'll come back down and try again, you can go ahead and take it there instead of securing it and double your profits. Another thing that I need a lot of work on is having patience during expansions. And so there's a few ways to kind of recognize this or kind of strategically apply this. And one is just watching the price action. So if the price action starts just blowing through the action points or even just creeping through them, but you're not seeing the up and down that you're used to seeing, it's not reacting the way that it normally reacts when it gets to action points on the left. Just have a little bit more patience, just be skeptical. And then you could wait to see the green or the red, the opposite color. Another way to tell is if you look up top and you can see that like you could have been in a secure trade going with the trend right now, and there's no signs of getting out of that secure trade yet, you would be holding if you were going the other way. So don't just add yet. Wait until it looks like you might get out, because sometimes it's easy to see like, oh, this is such a good run and I would just be holding on the whole way down. Well, that might help you like realize that you're itching to add kind of out of anxiety instead of like these are actually good places to put on trades. And then another strategy would be to kind of zoom out or go up in to the 5 or the 30, look for some of those bigger action points, or just kind of figure out where maybe around where 3 price cycles should be, because we know statistically after around 3 price cycles or 4 price cycles we can expect a price cycle retracement. So when it's looking proportionally like 3 price cycles, then you can start thinking, okay, now I should start thinking about adding, and you can start watching for the 3-bar reversal or the confirmation. So the last thing that I worked on was managing the break-even line. So quite a bit here. One of the things was, and this kind of goes with the patience during expansion, but look at the overall chart and try to see where would a 50% spot make sense. And so like if the chart is moving down somewhere, eventually there's going to be a 50% part of that. And you don't want to, it's hardly ever like way up at the top, 2 pips from the top. So as it's blowing through, you can kind of look and see, oh, kind of there was a full run on the left that had a 50%. Maybe it's going to be the same spot on the right. And where would the bottom be if that was true? And you can kind of guess at it, keep shifting it down, and wait until that 50% starts to make more sense with relation to the rest of the structure before you start, dumping on a ton of trades. You want to put your break-even line where it's easy to hit. So way up at the top, not easy to hit. So having like 20 trades at the top and 2 at the bottom, your break even line is going to be at the top of the chart. And that's not going to be easy for you to hit. It's going to be really difficult for you to hit. So that kind of shows you want, maybe more of like a pyramiding type of structure for your positions. One thing about the break-even line, this is sort of like not a break-even line thing, but if structure says you're done and you need to get out, it doesn't matter where your break-even line is at that point. You did a bad job moving it, and sorry, you still have to you still need to close, or you're going to basically be in a worse situation. So if you didn't move it where it needed to be, you broke a KPI, you're getting that retest, you're in obligation mode, you need to go ahead and close, even though you're not at the break-even line. So that's something, the break-even line isn't a sacred spot that you never close unless you're over it. The break-even line has context. So we like to divide up, or I'm trying to start dividing up my trading into kind of phases that I treat slightly differently. So early, mid, and late. So I'll go ahead and talk about those. So this is new, and I haven't really formally divided up my trades like this. And honestly, like trying to do it showed me that my mid is really muddy, and I honestly still don't quite have like a solid mid strategy. So early is pretty easy, I think, and it's kind of like you just started, so there's nothing to do. And late is kind of obvious too, because it's like it's an emergency at this point and you need to just be thinking about getting out. I wouldn't say that I'm like super successful at the late game, but feel like what you're trying to accomplish there is pretty obvious. But the mid, I still need a lot of work on that. So in the so I define this is personal to you, how many trades you want to have and how big they are. I've been trading a $5,000 account with a 0.02 lot size. So it would be, 0.2 to 0.24 lots for the early, and you can multiply it out. But this is kind of a typical, like if I'm in a range and I feel pretty good about one price cycle up, one price cycle down, or one up, two down, one up, two down, two up, kind of that kind of movement, I might go something more even and on the bigger side with like fours. Otherwise I would do something more pyramid-y, especially if I'm like counter trending and I'm pretty often wrong right off the bat. I would start smaller with a 2 and then maybe go 4, 6, or do like a 2, 2, 4, 8, something like that. And then mid is generally where now I'm really thinking about my break-even line. I might have put this in the next couple slides, but the next couple of layers is really like, you're dropping something kind of more sizable so that your break even can move significantly to a spot that makes more sense from where it was. And then late is, like I said, emergency kind of, it's not an emergency, but it's like you're so heavy you can't survive if this keeps up. And so you really need to be looking for an exit at that point. And it's important, you have to go even heavier. I didn't write it out, but it's more based on where you're at in the chart. So kind of a description of the early phase. It's like you have you're getting into the market for the first time. So you have your basic setups that you're looking for. Here's some of the ones that I'm looking for. It's been one price cycle, so I just get in. I'm at the bottom of a channel or the top of a channel or the bottom of a range or the top of the range, looking to move to the inside. We're in a trend and we've had a candle come down and fail at 50% of some kind. It could be the candle before, it could be came down the overall trend. So now we're just getting back in with the trend. There's M's and W's, which are high probability. After they complete, you might see one forming, so you get in early, or you might get in at the completion of one very light, because that would be, it's not the best place to get in, but that way you can have some amount of trades moving with it. And then if you just hopped on and the chart's just overextended, that's another time where we might go ahead and get in, or I might anyway. Early, whenever you get in early or in the early phase, it's more characteristic of you're not so worried about the break even because I mean, if you have one layer on, it's right there on top of that layer. So, you know, you're letting your setup breathe, you're giving it some space, you're not super worried about if it goes against you some, it's not detrimental to your account. And then when you're going to add your second or third layers, the break even moves really easy because there's nothing else on the chart. And so if you're not just adding all over the place, you know, the next time you add it, it'll move very dramatically. The mid phase is, you know, the one that I said was muddy for me. Your initial trades did not work out right off the bat. You got in and the market did not just take off with you. So you're going to have some patience. I put building, but you're sort of like doing a fade build. It's not like a build. So the market's moving against you probably, and you're having to add in. So you have to have some patience. You're you know, you're looking at the overall market structure to make sure you're still, you know, doing the right thing. You're starting to watch where your KPI shifts are and your action points, because once you cross those, your setup is no longer, you're moving to plan B. Your plan A is not valid anymore. But at the beginning of the mid, your plan A is still good. You're still doing plan A. It's just not unfolding as fast as you thought it was going to. And you're not holding out on adding, but like you're trying to be a little bit more strategic about moving that break even to good spots. This is where I actually have trouble because I even when I get to mid, so maybe I should just have a beginning and a late, an early and a late, but when I get to the mid, I want out right on the other side of break even. So I'm not doing a good job. So this whole experiment helped me realize I'm not doing a good job of letting the setup play out as if the same way that you're supposed to do when you're in the early. So the early has no pressure and you can just secure your trades and let it play out. The mid is where you, I think, you know, kind of make the money because your setup still plays out. And if you secure your trades, you have the size on to make the profit, and it makes up for having to spend all that time building into this move. My problem is I get nervous having that much on, and I get so scared of having to deal with the late phase that once I cross break even, I want to be done. I want to be out and back to the early phase. And so now that I have this framework, I can consciously work on the mid, and I can tell myself, hey, you're still only at, you know, 20 trades right now. You're good. We're still doing, you're not past your KPIs. So we're still good. We still have space to let this play out. And we should be focused on getting our break-even line to a place that we can secure. The late phase is the obligation phase. So once you get into this, you need to kind of pause, and you don't want to, you got to almost put your trigger finger away, stop adding aggressively. I mean, you probably should have stopped in the middle, but stop adding aggressively. And you're going to start watching for, you know, like a really good spot that's high probability, probably at the bottom of the setup. And you're going to have to go in really heavy at this point in order to bring your break even close enough that you can fix it. You're probably only going to get a couple shots at this, unless you're lucky enough to get a turn, in which case it doesn't really matter what you do. But if you don't get the turn, you're only going to get a couple shots, maybe one, and then you got to get out. And if you don't, or if this is a marching market and it keeps on going, then you're going to have to do the plan C, which is where you just close it all. It didn't work out. You want to try to have this happen, you know, when you're still within a reasonable loss that you can make up. We like to say no more than 2 times what you can make in a day, but you know, definitely before risking out. Okay, so this was what I was originally going to present on, but these are some kind of easy shortcuts that I had worked out, which maybe they're obvious, but how to move your break-even line. And so I got this little goofy line here to try to demonstrate, but basically, if you put a if you have a certain amount of trades on and you put that exact same amount of trades where you're at in price, the break even will move right in the middle, midway, halfway between the two. So for instance, like if I had one trade on, oops, I'm gonna have to stop the presentation. Oh yeah, and this I borrowed this from Pete. I'm gonna have to stop the presentation to do these. So, but anyway, for instance, if I put on one trade and then pretend this is like a vertical chart and price moves along, and then I put on, the next trade, my break even is going to be dead in the middle of these two, which that tells me is right here. If this was 4 trades and I put on 4, it would be in the middle. If this was 16 and I put on 16, it would be in the middle. Whatever you have on the left, if you put it on the right, your break even is right in the middle of the two. So it still applies if, for instance, I put my break even here, then I put my next 4 there, then I don't know if it'll tell me where the middle is, but pretend this is the middle. If I put 4 here and 4 here, break even is right in the middle. We have an indicator that tells us this, but what's nice is, or at least what I've noticed is during our session, sometimes somebody will say, I'm not sure how much to add here. And something you can actually do is, like, if your break even is right here, and because you already have trades here and you already have trades here, you can use this as your old break even and you can guess. And so if you wanted to, let me copy this one. So let's say this was 2 trades and 2 trades. So this break even line is worth 4. So you add them all up. So now we know we have 4 positions on our chart and we know our break even line is here. You can put on, and say we want our break even underneath this. So you can put on another 4 because it's times 1. We have 4 on here. Sorry, this is confusing. We have 4 on total. And the break even is here. I can put another 4 on here and it will put the break even right in the middle, which I think is slightly right of that. But if I put my other 4 on here, it'll move the break even right in the middle between your old break even and your new 4. So right there. So you can kind of know, well, I'm going to have to add what I have. I think we've heard Dave say, I'm going to put 30 trades on right here, because you have to, because you had 30 trades up top and your break even was there and you can see you need it down here. You have to put 30 on. And the reason why this is valuable to me is because if you told me to add 30 trades, that sounds astronomical, but it's what is needed to move the break even. And if you're in the late phase, the obligation phase, you have to do it. Or just close it. Just give up. Because if you put on, 5, because what was happening to me was I would know that I was in trouble and I would begin adding, but I would be scared to put on the size needed. I wouldn't even know ahead of time the size needed. So I'd put on 5 and then I could see my break even barely moved. So I'd put on 5 more, which put me at 10. Break even's kind of moved, but not really. And I'm dinking around and then it turns and I didn't get enough on and now it's too late. And if I had just looked at it ahead of time and said, well, you need 30, then yeah, you'd have to click a lot, but you can kind of know ahead of time, like, I'm going to need 30. You can brace yourself emotionally to put that 30 on. Some other rules. So something that's come up a lot for me is that my break even is right at the 50%. And it needs to be a little bit below the 50% so that I can be in profit when we cross the break even. So if you were to put on 4 trades here and 4 trades here, your break even is dead center. But if you multiply by 2, so if you put on 4 trades here and you put on 8 trades here, it'll move your break even to the 2/3 of the way. So this whole line was broken up into thirds. So here's 1/3, 2/3, 3/3. It moves it 1/3 of the way. So what's nice about that is if my price structure is, if I'm shooting for 50%, if it came down and I know it's going to bounce and go 50%, if I multiply however much I have on by 2 instead of by 1, so if I have 15 trades on and I put 30 here, or if I have 30 trades on, heaven forbid, I have to put 60 here, then I can know right off the bat that if I got that 50% retracement, then I'm going to be in profit when I get there. And then just to finish it out, if you multiply it by 3, it's going to move you to 3/4 of the way. So if you broke it into quarters, so 1, 2, 3, 4, it would, your break even would be right on the 3/4. So if you pretended this was your old break even line here and you knew you had to get it like super close, you would have to put on, times 3, which is like, if this was 20, you'd need to put on 60 here to get it that close. And sometimes that's what structure, I mean, like, the problem with this is if you're wrong, then you're really heavy right here. So you should probably, if it doesn't work out, dump half of those, or that's some techniques from the late phase that I didn't include. But if you're in the late phase and you had to do something like that super heavy and you didn't want to close after trying, that's why you can only try twice. But if you tried once and it didn't work out, you could dump all those, or you can, try one more time. But you can't put 60 trades on too many times before you get risked out. So we can go to the charts and look at some of this stuff in real time, but we don't have to. This kind of went pretty fast. I didn't think it would go this fast, but that was my whole presentation. So if you have any questions or you have any comments, then we can talk about them now.
Well, Megan asked the question, can you recycle here?
Yeah, you definitely can recycle. So I didn't talk about recycling, but definitely I would think that might land in the mid. But what you could do is, let's see here. So say you put your break even here. It went down, you added your next layer and it puts your break even in the middle, and then you get a pop up and it stalls here. It's like a fast moving candle that comes up part way. It matches some amount of resistance over to the side, and it just kind of stops there and it starts, looking like it's not going to go. And that's the first time it's done that. You can absolutely take all your profits right at that point. And then it will turn around and head back down. And then you can put this back on again right here after it comes back down. So in between, your break even is going to jump back up once you take your profits off. And then you can put this back on, which would bring your break even back to where it was if you did an equal size again. And then even if it just pops up the same amount, technically math wise, you would probably be at break even. It would have, because you didn't close any losing trades. If on the first time it pops up, you close losing trades of an even amount, it should move your break even. It should leave your break even where it was. So then when you do it again over here, your break even should actually like come down even closer. So then you can actually get out on a retest of that spot, which is if you're lucky enough to get twice, which does happen if you didn't make it to 50%. So yes, you can recycle.
Thank you, Nick. So first of all, thank you for putting this together. Last week we spent 3 days, about 3 hours, talking specifically break even stuff. Thinking back to that time that we spent, what are some of your takeaways, and big takeaways, or maybe an aha moment in regarding to maybe something that you didn't know that now you know and now you're implementing into your trading? Is there anything that, like a big aha moment that you grabbed that maybe you already shared tonight? I'm just kind of curious if there was anything that you didn't know that now you know. Does that make sense?
Yeah, I would say there was, I mean, yeah, there was a few things. Like I was saying a minute earlier, like the mid phase was a really big aha, like kind of, oh dang, like I have really just been jumping from early to late, at least emotionally, and I was
Mm.
playing I, I was mixing them up. I would play the late as if it was early. I would hold and I would be playing the late as if it was the mid. I would be trying to build and hold when I was too heavy, and when I was in the mid, I'd be playing it like it was late. So I had everything kind of all over the place, and I could see once I separated out kind of the different ways to be looking at things that I had mixed it all up, and it didn't really make the strategies I was employing didn't make sense with the rest of the stuff I was doing. It wasn't cohesive. I was doing one thing from early with a thing from the mid and then another thing from the late, and altogether those things didn't add up to profitable setups. Um, Another thing was this math here where just consciously doing the math to know that I have to put a certain amount on to move that break even, because when I risk out or when I have a losing day, I'll go back and relook at the chart, and I'll see I did get a little bit of a pullback. I did get, like a 50% or 2 times going up, 25%. And I'll be like, why couldn't I have capitalized on that? What happened there? And it will be because I did not go heavy enough to move that break even.
Like
Um,
yesterday's market was a classic example of that, right?
Yes, exactly. Yesterday and today. Today more than yesterday because it was way more obvious. There was like at least 2 spots that I should have been able to get out. Um, it was, it was easily like not a, I mean, it came up right underneath. That was something I was going to maybe walk through, but the chart comes up and it touched the bottom of like a pretty obvious resistance on the left. And, it was 15 pips down and 5 up, which, like, if you were doing the 1/3, you would have been right at break even at that spot. So you could have got out for exactly break even. And I was just super underwater the whole time. And I could have, if I would have, been planning better, got through that. And then yeah, I mean, the other one, really what the whole thing was is the aha moments, but having patience during expansions, like that was a huge problem yesterday and today, where it was moving down and I was just adding the whole way down. It's like you can't do that. After some point you have to recognize that this is not normal, and I still am not good at recognizing that it's not normal, but I can go back and plan my trades differently and see that I would have survived if I had done it differently.
So the next thing for you, and something that you didn't talk about, but I think it's very vital, like now that you have the break even line that you're using, the next thing is how does the question that you need to answer, how does placing trades at and by having proper trade placement or PTP impact your break even line, right?
Mm-hmm,
That's
mm-hmm.
that's the question that you should be asking yourself as a trader. How does having good PTP impact the break even line,
Yeah,
right?
that's true. Yeah, yeah.
And by having good PTP, it puts your break even line in the best possible situations where you don't have to go heavy to move it, right? And if you're going heavy to move it, then maybe you need to refocus on proper trade placement, right? Um, Josh asked a question in your response to Megan about recycling. Do you keep your overall trade? Do you keep your overall trade so long as structure remains for it to be valid and wait for it to materialize? And if you cut it during the process, do you consider the late phase the cutting phase?
Yeah, so I have so my nemesis right now is the when I'm counter trending a trending market that doesn't turn. So I've noticed that I'm always trying to find the apex, trying to find that turn. And I think it was a week or two ago that Dave, you said something along the lines of, when you're going against the trend, it's not really wise to look for the turn. I mean, if you get it, great. That's awesome. But like there's a channel line that you bump up against every pullback. and then it turns, and that's like your max profit spot. And um, now I'm looking to cut at that spot. And so you know, in the early phase, I can afford to look for an apex, especially if it's ran a while and it's overextended. But when it's mid to late, I'm trying to not look for the apex anymore. I'm going to try to just cut on what seems like the trending pullback, the counter trend pullback, and whatever size that is, or whatever size makes sense. That's where I'm going to try to recycle. And um, and if it keeps going, that's fine, because we know how to build from there. If it keeps going and I cut, it can turn around, and if it retests that 50 and it doesn't pull all the way back, I can go back in right there. So I'm not worried about recycling too early or cutting too early.
So Josh says that's a good answer. He'll accept that answer.
Thank you, Josh.
I appreciate that. So does your break even strategy, or I don't know really call it, I guess it is a strategy. When you're moving your break even line, that's definitely a strategy. But when does your break even strategy change dependent on market structure?
Um, yeah, I would say where, so whenever I say make it easy to hit, that easy to hit is totally dependent on market structure. So what's easy and what's hard is, inside of a structure. So if it's a upward channel and it's bouncing off the tops and bottoms, and I got in and I got in early and it was still going down. I really want that break even below the midline of the channel. If it's a range, below the midline of the range, or, if you can see there's an action point that's heavily hit and it's been holding, you want it below that action point. If it's just this huge drop, you want it below the 50%. If you can see there's like some level of local resistance or support, you want it below that if you can. So it totally changes depending on, what the market's looking like that day. And I think everyone could do a good job of, or everyone would really benefit from taking the time to start categorizing the market, and just really, before you trade, write it in your notes or something. I mean, in our trade room, we do that in the 1, 2, 3s. We talk about the structure, we talk about the KPIs, but I think you should do your own critical thinking and say, I think this is a range, and I think here is the range, and then see if you're right and really work on recognizing those market structures. Because I think once we get really, really good at recognizing those, then employing the right strategies is the only next thing. But if we don't know what we're even looking at or trading, then I think you do what I did, which was mix and match strategies that don't go together anymore.
Love it. So being completely transparent and honest, how often do you trade with or without the break even line? Like using that as part, like what you talked about here, this kind of strategy technique.
Yeah, I almost can't trade without it. I have been using it pretty much every single day for a while. And I tried trading without it the other day because I opened MT Vibe and I didn't have the EAs or any break even lines set up. And I was like, I'm good enough to trade without this. And I know my shortcut math. And it was really difficult actually to do that. Even though, you have to just keep recalculating everything. I have to say, I think that was 4 up there and there's 4 here. So they'd be between those at a size of 8. And the line just being on your chart just makes it so much easier.
I appreciate that. And I've come to find that true to me too, right? True for me too is like, before summer, I don't think we were really trading with it, right?
Mm-hmm.
And now it's like I can't live without it. I use it 100% daily in my trading. In almost every single strategy, I have it in there. I was just talking about it before. I use it in my overnight setups. I use it in my recycle opportunities. I use it in my trending markets, right? And I use it when I'm building, and I use it when I'm fading a position. And so I'm always constantly using it. Is there just a couple other questions? I don't want to feel like I'm interrogating you, but I'm really
No, it's fine.
curious, like, how do you think, like, since you and I have adopted it basically, how do you think that understanding and mastering the break even line could benefit other people who don't have it adapted into their arsenal of trading, right, into their, they're just maybe listening and hearing this for the first time.
Yeah,
Wow.
that's a good question because it's been such a integral concept that it's hard to think about what trading was like before using it and before even thinking in terms of break even. Um, I I would say the basic idea of how trading is, you kind of learn trading 101, which is like put on one trade and let it either go to profit or go to loss, is there's no real need for a break even line because you only have one trade on. So once we started breaking up our trade into smaller trades so that the risk was lower, then the break even line becomes almost critical to, and it is, it helps you know where profit is, and that's like, I mean, it's amazingly helpful to see on the chart, below this line I am not in profit, but above this line I am in profit. And it's almost counterintuitive because you have losing trades on, you have trades up top that are in a loss, and you're putting on trades down at the bottom, and somewhere in the chart there's a line that's like, on the other side of that line you've made profit for the day. And not only that, but like if your account was positive before this whole setup and now you're running a negative 1% above that line, not only have you restored the profit for that had before this trade setup, but you might be adding to it. And to me, that was like not something that I could comprehend just intuitively without this line. So just knowing like, oh man, if I could just get that line, it's like a video game. If I can just get that line somewhere that makes sense, and then I get on the other side of it, I can close everything. Like I don't have to do any more work, and I'm done for the day. And I did a good job. Even with the losing trades, it's like kind of takes away the perfectionism. I didn't have to fix everything.
Now, right there, what you just said to me was my aha moment with you. Because that, to honestly, I wish you would have put that in your presentation, because that is the meat and potatoes. That is the everything that the break even line gives a trader. So if you're just starting out, if you never used the break even line before, the power of the break even line is that you can close out of losing trades and not even think about it.
Mm,
Before the break even line, how many of us were like, well, I don't want to close out of this trade because I'm still losing. I don't want to close out of this trade because it's still a loss. I need to wait until the market turns in my favor and then I can close out. Right. And
mhm.
every single trade that we placed, we protected. And now that pivotal moment, or that aha moment that you had with the break even line, it doesn't matter if you have 20 trades above the break even line. As long as you're above the break even line, those trades don't even exist to the trader, to me, and to you as a psychological. I'm not holding on to them anymore because I'm in profit. I can close out, or I can secure my trades and then let them run for more profit. But those trades are not damaging me anymore psychologically or mathematically, right?
Mm,
And that,
yeah.
to me, is the ultimate power of the break even line, is where you can physically see on the chart where those trades you don't matter, does not matter, the losing trades don't matter anymore. You can close out and be done. And that, to me, is the best part about the break even line. And also the hardest part in trading is hitting that X to close trades for loss.
Mm,
That's something that every trader has to learn how to do. And it's so much easier to close a losing trade if you're making money. Do you know
Definitely.
what I mean?
Yeah.
And that to me is the I don't know what the right adjective there, but is like the holy grail, the creme de la creme of why the break even line is so powerful in our trading sessions. You know what I mean? So
Yeah.
I appreciate you saying that. But next time you teach this, make sure you lead with that.
Absolutely.
Because honestly, that is the why, right? That is the why we use the break even line, is to help us to eliminate negative trades without without thinking about it, without having to worry about it, right?
Yeah, that's a
So
good
um but any other questions from anybody else out there? Or I have a couple more if you don't mind, but I
point.
love that. I love that. So um I think you kind of answered this question already. I just kind of wrote it down when you were talking. But so I think the question was, how do you see it influencing your trading moving forward? But I think you answered that one, right? Um, and let's see. I just wrote this down. Um, yeah, I'm gonna ask this. Can you maybe think of can you think of a recent? I mean, no, actually, you said that one too. Of time you said that was even today, where the break even line significantly impacted your trading, right? So,
Yeah.
and that happened in today's market. Um, on the flip side of, we just talked about the value and the benefit and why the break even line is so powerful. What do you think are some common misconceptions that traders might have, um, that maybe you had or you didn't know about what or why the break even line is so powerful? Does that make sense? Like, the first thing you talked about was, we didn't really talk about the early, mid, and late and how that break even line impacts you, but impacts your trading and how you can incorporate it there. But maybe what are some common misconceptions do you think that traders might have about um, utilizing the break even line before they
Yeah.
even started, right?
I think one that I had was, and I mean, saying it out loud sounds silly, but it's this thought that the market will, like, you just sit and wait until the market gets on the other side of your break even line. So it is somewhere because you put trades on, and now you put more trades on than you wanted, so you're not adding, or you run out of trades that you can add because you're out of margin, and you're just sitting waiting, thinking, well, the market, once the market's on the other side of my break even line, then I'll close out of everything. But you've, like you like to say, given all the power to the market. You're not taking control of the trading, you're just sitting around waiting. And that's not how price works. It doesn't just, it won't always move to the other side of your break even just because you have a break even. So that's probably one. Another one is that um, you can just aggressively add and keep it close, and that it'll always work out. That is just not true, and I've had it not be true. I've thought in my head, oh, as long as I just keep adding a ton of trades, so my break even's only like 3 or 4 pips away. Oh, it'll be so easy to get to break, positive, because the market will pop up 5 pips and boom, I win. And there'll come a day where you did that and then it doesn't ever pop up. It marches and you used up all your trades, or you're in way too heavy and you lose, if you're not in a prop firm account, you lose 10-20% that day because it never turned around. It went 70 pips. And you just doubled your layers every time. Those are probably the two main ones that I can think of. And I probably want another one is that you'll get another chance. Like, so slow playing, moving the break even line, especially when you're getting down to 3 price cycles and you need that one back in your favor. And you didn't add enough to move the break even line. And I think I was just thinking, like, if I just keep adding 4, eventually I'll get a turn. And it's kind of similar to the first point of, like, it'll just cross the break even line on its own. That didn't work either. Like you didn't bring it down to where it needed to be, and now you're never going to get on the other side of it. So sort of related to the first one, I guess.
So I appreciate you answering that question, and I think you hit the nail on the head where there's three things that you need in order to really maximize the power of the break even line. And I would probably say one, or like prerequisites, one, reading the market structure, knowing where the KPIs are, right?
Mm-hmm.
So that you know, hey, I need to get to break even and flip my trades, right? I shouldn't be in sells anymore. I shouldn't be in buys anymore. I need to get out at break even and flip my trades, right? Because it just crossed a major market structure, right? So learning how to read the market structure is going to really maximize the break even line, right? When you need to. Making sure that you understand action points is another prerequisite, because you don't want to add at points where it doesn't make sense to add, right?
Yeah.
Where you're going to add to your risk instead of adding to reduce your risk. And adding trades to manage the break even line, you're either going to be adding to reduce your risk, or you're going to be adding to increase your risk. And if you don't understand action points, it's probably going to be the latter more often than not, right?
Mm-hmm. Mm-hmm.
And then the last thing, the third thing, so we got market structure, action points, or PTP, what we call it. And then the last thing that I would probably say that is beneficial to that is really it is really keeping it about a price cycle away if you can, right?
Mm-hmm.
So that when it does turn, or if it's 50% of something, to keep your break even at 40%, right?
Mm-hmm.
Managing it so that when it does turn, the break even line doesn't go to where the market should go, right? And turn. So you're not getting your break even at bounce points, basically. So
Yeah.
why do you set up a trade setup just where you know that it's a bounce point and that's your break even line? It
Mm-hmm.
doesn't, you're not trading to break even, right? You're trading to make money. And so by keeping the break even in an appropriate place, where if it does hit that, you're now making money. That's like the third thing, the three things with the break even line. So last question for the community, for the group that I have. Yeah, it's like, yeah, Timmy just said price just bounces off the break even line. Yeah, we don't like
Yeah. It acts
that.
as support and resistance.
But last question, kind of for the community is what do you those of you guys who use the break even line, or those of you guys who, yeah, let's go with those of you guys who use the break even line, any feedback that you have when you're applying the break even line in your trading? How has it helped you? Any success stories, anything like that you guys, those of you guys who are using it, right? So just kind of curious if there's anybody out there that has that they want to share. Like Nick and I is like, we've adopted it. It's like second nature. And I never thought, 6 months ago, I never thought I would be using an indicator, because I never do. I just trade purely price action. And so it's kind of weird to me to think I'm using an indicator on the daily, right? Anybody have any success stories out there that they'd like to share, or thoughts on the break even that they use, or even if it's just like you love it, you use it, and then on the other, maybe on the flip side, you don't use it, tell me that you hate it.
Worst line ever.
Come on, anybody? Bueller? Wow.
Oh, it's instrumental.
I love it. Oh, good comment, Josh. Diane, do you have something? Because then I'll comment after you.
Oh, well, thank you, Pete. That is so kind of you. So yeah, I've always traded with break even in mind, but without the break even indicator, like literally if I'm in 5, 10 positions, I'm writing down the prices, pulling out my calculator and averaging them to figure out where my break even is. And by the time that happens, like the market, by the time I figured it out, the market's gone against me, or whatever. So the break even line to me is, I'm kind of like you, Dave. I can't trade without it. And
Customer service.
it doesn't work on gold, which is a bummer, but in my personal account, I'll be in several positions in gold, but in my prop firm accounts, I typically don't get into more than probably I don't think I've been in more than 2 positions in gold so far. So it's a little bit easier to calculate, but yeah, it's just revolutionized my trading in the prop firm challenges. And yeah, like you, Dave, I feel like I can't trade without it.
Yeah, I thank you, Diane. And I was just, before Pete says something, I think we should make our break even line look like this now, like Pong, pew, 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 like what Nick is playing right now. This would be a better break even. What were you gonna say, Pete?
For me, the break-even line oftentimes serves as a big warning sign. If I am wrong and I'm and this thing is 2 price cycles away, and all of a sudden you see that your break-even line is nowhere near where it needs to be, that's a big warning sign for me that to pay attention, right? Either that means that I'm in phase 2 or phase 3. I need to pay attention to the next bounce point. I can't add more trades because that's just going to increase my risk. So on kind of like the defensive side, the break-even line is a big warning flag, not just when it's 1 price cycle away, but when it's far away and you're like, I've got a long ways to go. I need to buckle down.
I love it. Thank you. No, I appreciate everybody sharing. I mean, Nick, I really appreciate you taking the time to talk about it. I know there's some things here that are new that previous to our conversation that you're now adding to this, and so I appreciate you taking the time, and you certainly did a great job, so appreciate it. And the last question for Nick is what is next on the horizon for you? Is there any other topics or strategies that you think, hey, you know what, I really want to dive into and think of, and kind of learn and showcase, or even hopefully come back and teach us some more, you know what I mean?
Yeah, I have one basically yesterday's market. I'm gonna call it Everest. I feel like I'm taking on Everest because it's just this steep mountainside that it doesn't ever turn. And so I've been brainstorming, that's the next thing that I've noticed, that is my Achilles heel, that market which doesn't turn. And so I've been like trying to figure out, what can I do, what signs can I look for, what strategies can I employ to get out of that alive, and at least at break even. And that would be the next thing.
I appreciate it. So how to exit a how to trade through a non-volatile market. That
yes,
kind of summarizes
exactly it. When you're the wrong way.
Yeah. What to do? Pull the emergency.
To do when you're wrong.
Pull the fire button, or fire alarm.
Yeah.
All right. Well, I appreciate it. Thank you, Nick. Great class. Again, if you're not using the break even indicator, that does come standard with our AIs. But if you're not, you go to the shop in MT5 and download, and just do a free indicator and go to break even. Give it a shot, test it out, try it. It's like, once you do it, you won't go back, I'm pretty sure. So, all right. Thank you. And we'll see you guys in the morning for hot seaters, bright and ugly in the morning, and everybody else will be in the live trade room. So thank you guys. See you.